Mark Florman, Chief Executive of the British Private Equity and Venture Capital Association. But I've been involved in Africa for 30 years. I developed a charity in East Africa where we build schools, agri-communities, and micro-credit banking. And I was the founder of a private equity fund called 8 Miles with Bob Geldof a few years ago. And 8 Miles is Pan-Africa private equity, and I'll come back to that. Prior to that, I was with Doughty Hanson, a private equity group in Europe, for about 10 years. So I'm going to set out the case for, the question is, which asset class in 2013 would you commit to? My answer is that if you're going to commit to private equity in Africa, I'd not only start committing now, but I'd keep committing in 2013, 2014, 2015. You need to spread out your commitments year by year because, of course, you become uncertain as to when drawdowns take place. So you need to build a portfolio across the continent. There are 53 firms to choose from, representing around 75 funds. Some of them are run from the United States, some from Europe, and many, of course, from Africa. They're both Pan-African, Northern African, Sub-Saharan African, and regional, and then sector-specific. So you've got plenty of things to choose from. I'd consult with the African Venture Capital Association that is based in London, as well as I was saying earlier, just after lunch, the local associations country by country. From a country point of view, I would look at Morocco. I like Morocco very much. West Africa, Nigeria and Ghana. East Africa, in particular Kenya, Uganda and Tanzania, and of course the southern region. South Africa, you'll realize, is extremely well developed and therefore is on equal terms more or less to Europe. Why private equity? Probably a 20 to 30% return over time, but you need patience and you need to accept the illiquidity because the secondary market is not yet there in African private equity. I hope the secondary market will begin soon, and there's a new initiative headed by Green Park Capital in London in partnership with the IFC to create a secondary fund, which we're really looking forward to seeing. If you're worried about political risk, my answer would be don't. Don't worry that much, has been said a lot. It's much less than you think, and you can buy political risk insurance. For the 8 Miles Fund, we designed a PRI facility, which is a rolling program brokered in London and placed in the Bahamas, covering the top 20 countries in Africa. And if you actually check the price of political risk on a range of African countries, you'll find that it is less than the price of political risk in a range of Eastern European and Asian countries. So the reality is quite different from the perception of the reality. So why private equity? Active ownership, disciplined investment strategies, backing great entrepreneurs and delivering good returns. But there's something else. It's the feel-good factor, which I mentioned earlier. Not only should you get an IRR, but you should also get that feel-good factor because there's a catalytic effect in venture capital. As President Obasanjo said earlier, that is the best and #1 in the world. One job created in Africa has an enormous impact on society and the economy. So if you have not just a heart for money, but a heart for doing some good, a dollar placed in Africa will deliver you that ERR, which is what you can add to your IRR. Sectors: infrastructure, power, financial services, agri, and telecommunications.
Doing business in Africa. You can't afford to be without Africa Investor.